would love to introduce Kirt Christensen. He's been a Westmark associate. Nikki and I were saying easily 5 years. Yeah. Yep. He's a very genuine guy. So when he says he's going to work with you to your trading success, it's a genuine statement. So let me tell you a little bit about Kirt himself. He's the owner of Trading Science. He spent $95,000 to perfect his own stock market systems. Wow. After ditching the mainstream advice and methods. He's been doing this successfully since 2007 through all kinds of crazy market conditions. So Kirt, I'm going to see if you can mic up there.
I think I should be ready to roll.
Super. Now, are you going to go on camera and say hello, or are you just going straight to the screen share?
Here's the crazy thing. My video thing is showing that it's running, but it's not popping up. So I don't know why.
Oh, all right. We'll forgive you. Let's hope that screen share will work. So let's have you get that. All right, mister, take it away.
All right. Hey, it's a shame that my dang video didn't work, the webcam, because I actually cleaned my office today. So man, that's such a waste. I have to come to my office to get away from my wife and my kids. If I put something down in my house, within like 2 minutes, it'll be gone and put away into wherever it's supposed to go. So I'm not that guy. So I have to come to my office to put stuff down and have some sense of permanency, But it looks like the audio is working and everything just fine. So we'll go ahead and roll.
Please, we're going to You're to take over. Thank you.
All right. So we're going to talk about a simple ETF system that has clobbered the S&P, netted a 90% win rate in over 1,400 trades across 9 different distinct sectors in less than 15 minutes a month. And that 15 minutes a month is really a crucial takeaway to what we're going to talk about today. So we're not talking about day trading. We're not talking about anything super, super time consuming. We're talking about really 15 minutes a month. And frankly, in the last few months, it's been less than that because we haven't had as many position changes. So quite simply, here's how to see if you'd be interested in what we're going to talk about. Here's our current positions through the close yesterday. So today is 9/2, yesterday was 9/1. So these are the 9 sectors that we trade of the market. We got the DIA, which is obviously the Dow, the SPY, which is the S&P 500, the Qs, which is the NASDAQ. We got the KBE, which is a little less known. So that's the banking and finance sector. We've got the OIH, which was what we use for oil. We got GLD, which is gold. We got SMH, which is semiconductors, IYR, which is real estate, and XLB, which is materials. And these are our actual current to the date, through yesterday's results of exactly how we're doing in all these sectors. So we've got some huge winners, obviously 58% on the Qs, 55% on semiconductors, and then just 2 losers that we're currently holding on to right now, the KBE and the IYR. So today we're going to cover answer some questions. Number 1, is it really feasible to beat the market in 15 minutes a month? Number 2, do you need to become an options genius or a futures guru or have 7 math degrees to figure this all out? And what is the fatal flaw in buy, hold, and pray, which is, the conventional financial advice that you hear is just buy and hold for long term. The stock market always goes up, exactly, things like that. Number 4, do I have to day trade or pick hot stocks to be able to do this? Number 5, why only buying long for the market to go up is delusional thinking. Number 6, why is compounding so crucial to my success as a trader, and what is the 50/100 rule? And number 7, is traditional freely available technical analysis a scam? So we're going to talk about each of these and cover those questions as we go through this presentation. So I'm sure most of you are very familiar with what an ETF is, but if you're not, ETFs are basically, are taking over the market. Any section of the market, segment, country, or idea, there's probably an ETF for it. As of the time that I took this screenshot, there was over 6,000 different ETFs, and ETF assets were over $1 trillion, which is pretty phenomenal to think about. So why should you listen to me? That's me. Sorry my video isn't working. I even wore my Trading Science shirt today and in my clean office, so quite a shame. But why should you listen to me? Well, I'm from a small dairy farming town, Mink Creek, Idaho, outside of Preston, Idaho. So if you ever saw the 2004 movie Napoleon Dynamite, that's set in my hometown, and my cousins are actually credited extras in the movie. This is my wife and 3 kids, a little bit dated now. The kid on the left, he's now 6'10" and plays basketball in college. And my middle son is 13 and my daughter is 16. And wow, what crazy ages for kids. But, for me, I'm all about my wife and family, and I'm about staying away from this. I just hate being chained to a desk. I hate being chained to something that has, have to be somewhere at a specific time to get specific things done. And that's why, for me, trading has been such a great outlet for my creative endeavors. So my investing goals are pretty simple. Tell me if this is something that's along the same route that you're interested in. I'm looking to make way above market returns, right? If I just wanted to make market returns, I could just invest in an index fund or an ETF like the SPY or the Qs and be done, right? So I want to make way above market returns. I want it to be mechanical and emotionless. And if anything about this March sell-off led me to be more strongly in favor of that, I can't count the number of calls that I got from friends and relatives as their entire portfolios plummeted, as they were taking subjective positions. I think this stock is going to go up, so I'm going to buy it. I think this is going to go up, so I'm going to buy it. When you trade mechanically and emotionally and without emotion, all of a sudden that frees up all that mental capacity to do other things. Number 3, it's got to have lots of compounding. And like we've mentioned before, it's got to take less than 15 minutes a week. So how many of you are on the same page? How many of you are interested in that kind of trading? So we're not talking about day trading. We're talking about swing trading, and more specifically in the way that the market's been going recently, we're talking about even a little bit longer term swing trading. We've been in some of our trades for multiple months now. So now what a trading system is, and when I talk about a trading system, it has to have these 4 elements. So as you look for anything, you got to know these 4 things. And any of these are left out, you're going to be left holding the bag. You're not going to know exactly what to do. Number 1, you got to know when to enter. And crazily enough, this is what most people concentrate on, and this is where their interest starts and stops, is when to enter. But look at the list. That's only one of 4 things. And frankly, on the list, when to enter isn't nearly as important as number 3 and 4. So when to enter, number 2, when to exit, number 3, how much money to place in each trade, and that should be number 4, not 5, but how much in dollars should I risk per trade? And I would say those last 2, how much dollars to put in a trade and how much dollars to risk. Wow, we could have whole days just on the risk management and the portfolio management side of things. I would generally say most people are trading far too riskily and allocating far too much capital into any one individual trade. So in my opinion, I only want to trade objective. That means non-subjective. It means either the rules are black and white. It has to be objective. Everybody has to be able to come to the same conclusion looking at the same rules or mechanical system or algorithm or output. It has to be quantifiable. It has to be emotionless. Right? And if without those, you really don't have a system. So we're going to show you a little bit of some proof or evidence of what we're talking about, and then explain what the concept is, and show you how we put it all together. So this isn't some thing that we invented yesterday or a vague concept. That we've delivered over 624 of these trades in real time since 2007. We're going to show you some of the recent closed trades here in a second. But remember, we're talking about the DIA. So on the DIA, here's the equity curve. The red shows compounding. So let's just ignore that because those are just crazy numbers, because that's the point. If you can take anything that has an above average expected return or has a positive expectation and you compound it over time, crazy phenomenal things are going to happen. But let's take the compounding off the table. Let's just say that we invested $10,000 and we took all the profits off the table. We spent them or we put them aside in the account, whatever. And that's the blue line. So $10,000 in the SPY would have turned into nearly $60,000, $70,000 in this last 13 years. Here's some sample trades on the Dow, on the DIA. You can see the green arrows are where we went long, then obviously red where we went short. And you know, these are day candles. So some of these trades are a couple months, some of these trades are a couple weeks, but on average, you could say around a month or two into each trade. The SPY, same thing, $10,000 into nearly $60,000 with compounding, obviously $10,000 into nearly 4 million. And here's some sample trades on the SPY. And obviously each time you do one of these trades, this represents all the SPY trades in a year. So we're talking a grand total of 5 trades on the SPY in a year to get these kind of returns. NASDAQ, one of our most fantastic sectors right now. We're up, I believe, 55% right now on NASDAQ on one trade. Banking, KBE. Now, KBE, this sector generates more trades. It's a little bit more volatile. You can see a little bit of the gaps in the candles, which is kind of strange for an ETF, of course. For an ETF daily candle to have gaps, that means, you know, it's kind of a little bit of a volatile sector in term. Well, banking shouldn't be volatile, but recently it has been for other reasons that we won't go into. But a few more trades. And we're currently down on KB. That's one of our only losing trades. Oil is one of my favorite sectors of all time. You can see how smooth the equity curve is, trading the oil and compounding or trading it without compounding. And oil offers tons and tons of trades. We're currently up over 45%, I believe, on our current open oil trade. So if you want to, we'll show those open trades here in a second if you want to jot those down. Gold, we're up over 55% on gold. Granted, these trades are a little bit long in the tooth. They're a little bit longer than our normal trades or normal swing trades, or, you know, say 30 to 45 to 60 days. I think this gold trade goes back to sometime last year. So, but still 50% on a conservative trading a single ETF. Pretty dang impressive results. IYR, you can see IYR has a lot more trades. Real estate, a little bit more volatile, and materials. So just to show you, this is just a sample of what the oil trades look like. If you wanted to look at them trade by trade, this is going back to 2006. So now nearly 14 years of track record, including for the last several years, we've been trading nearly $100,000 in a live account, posting all the trade confirmations that come up. But oil, you know, we've made 970% before compounding. The best trade was 216% in 131 days. Worst trade, negative 16% in 50 days. So overall, $90,000, if you would have put it, would have turned into 1.5 billion with compounding. But of course, that's just crazy, not realistic. You'd withdraw some of that money along the way, right? Of course, put into other things. But let's go to the opposite end of the spectrum. Let's say that you never compounded it and you just used the $90,000 of seed capital and never compounded, just withdrawing all the profits, or at least not using them. You would still have turned that into 815,000, or nearly a 10x in that 14 years. So what does this mean for me? Where do these trades come from? Well, this is where we get into a little bit of the controversial part. So for me, technical analysis is 50 years of traders arguing about stuff that works sometimes. Right. So if you go to Amazon and take a look on Amazon and type in the phrase technical analysis, well, how many results come up? You're going to come up with over 50,000 results, everything from technical analysis of the financial markets, technical analysis for dummies, and it just goes on and on. So my controversial statement is moving averages suck. Technical analysis by itself doesn't do it. Let's face it, we all really have 3 basic elements that we look at, and everyone's working with exactly the same data. There's no such thing as hidden data now in the stock market when you're talking about these 3 prime variables. So you got the price, the time, and the volume. So any generally accepted technical indicator is going to use at least 1, possibly 2 or 3 of those different data sets. Now, of those 3, in my opinion, the one that's the most neglected, that's the one that's given the least amount of respect, is volume. Volume has a huge impact on movement of prices. So price, time, and volume, I'd say volume is where people have concentrated the least, which means the most opportunity. Because if you go to Investopedia and type in technical indicators, you've got a technical indicator for everything, right? Bear chart, Cambridge, Doji. I mean, we just got to the G's, right? It just goes on and on and on and on. So what's the common problem with all these technical indicators? Well, the common problem is they're all available for free on almost any trading platform under the sun. So, you go put on whatever this is called, a wolf wave, which, nothing pro or con against wolf waves, but that's probably commonly available, or a vortex indicator, or a valued policy law, right? Or the upside gap two crows. All of those are commonly available. And most likely everyone scrambles, because everyone scrambles to put their name on a proprietary indicator. They're manipulating those core elements, remember, price, time, or volume, in just a slightly different way. So kind of the big failure of most of those, you're going to see standard deviations and Bollinger Bands, MACD, stochastics, Wilder's parabolics, triple smooth exponentials, and all the rest. They all use moving averages in some fashion. But even a newbie to trading knows that moving averages are a huge gotcha. If they're too short, if you set the time period too short, you're just going to get whipsawed, entering and exiting trades all the time with, no real profit. But if they're too long, you're going to get left in the dust, missing big market turns. So for the last 20 years, I've avoided moving averages like the plague just for that reason. Sure, I still look at stochastics every once in a while, but only when I'm watching for a change and I want a trend change, I want confirmation. I don't even use candlesticks anymore, even though I studied them pretty intently for over a year. I mean, I spent over $3,000 just on studying candlesticks. I try to look for other areas that are not being monitored by other folks. I try to look for areas that don't have a commonly available technical indicator. I try to look for things that in terms of the way that we predict chart patterns, you have fundamental analysis, you have technical analysis. I would say the real secret is to look for what hedge funds and what large investment firms look for. They look for more quantitative analysis. That's where you take something, you invent a model that isn't commonly in use, and you use that to see how predictive it is of the market, because the pack is invariably wrong. If it's available on a commonly available, freely available on every charting platform, like a moving average, it's going to be wrong. The pack is invariably wrong. So what kind of spurred all this? Well, it's pretty simple. There was a book that came out in 1963. Now, I'm not saying I bought the book in 1963 because I wasn't even alive. I was born in 1973. But many years ago, probably 15 or almost, probably 15 years ago now, or more than 15 years ago, 16, 17 years ago, I came across this book, New Key to Stock Market Profits. And I will tell you that it is an absolute snoozer. If you ever need to go to sleep at night, just pick up a copy of this book. It is boring. However, it does detail what I believe to be one of the hidden secrets of trading. And that is quite simply Joe Granville, who's kind of an infamous trader. If you want to look him up afterwards, go ahead and look up Joe Granville. He had a lot of kooky ideas, and he had a lot of great ideas that actually worked. The issue is you got to figure out which ones worked and which ones didn't. This is one of the ones that did work, and we'll show you why. He created what he called the on-balance volume theory. And that is simply, quite simply, that a change in volume is going to precede a change in price. Bullish or bearish, a volume precedes price. So if you want to write down even 3 words that encapsulates what I've spent my last 16 years on and over $250,000 on, it's that volume precedes price. So what he invented was a thing called OBV. So OBV is called on balance volume. It's a very simple indicator. Now, remember, this is back in 1963. So think about the charting options that existed in 1963. There weren't any. You got your charts printed and delivered in the mail, right? They had those books of daily charts that you could get. So OBV was a simple indicator that adds a period's volume when the close is up and subtracts the period's volume when the close is down. So cumulative total of the volume additions and subtractions forms what's called the OBV line. That line can then be compared with the price chart of the underlying security for divergences or confirmation. So like we mentioned, OBV was developed in 1963. Can you think potentially of any computer power advances made since 1963? Now remember, I first started this ETF tipping point and came up with this idea and started using computing power to process it in 2006. Do you think there's any substantial difference in computing power? Well, of course, absolutely. If you look at this graph that shows kind of computing power through the ages, and if you look where 1963 would be, just a little bit of 1960, you can see we weren't even into integrated circuits back then. They just gotten out of using vacuum tubes. Now they're using transistors, but there were no integrated circuits. So famous computers that we know of, like the IBM PC and things like that, didn't come out even until 1980. So computing power back then was just minuscule and just a fraction of what we have now. So they calculated all of this at the close of every day, right? So they were just taking the volume for the day, adding or subtracting it, and it worked. It worked to predict the movements of the stocks in the 1960s. So if we did that today, it wouldn't work. Why wouldn't it work? Well, because OBV is now a commonly available indicator on any charting platform, and it's lost its predictive nature. However, whoops, my screen just went away. Hold on. What we do is that to the next level times 1 million or 2 million. We look at every single stock transaction individually that makes up the basket for that ETF. So for example, for the S&P 500, we keep a running total throughout the day as to whether there's more buying pressure or selling pressure going on at every single trade, tick by tick. So you might be asking, well, how do you do that? How do you tell whether there's more buying pressure or selling pressure going on an individual stock transaction, right? In this case, the individual stocks that make up the S&P 500, right? It's pretty substantial. These aren't low volume stocks. This is Baker, this is Best Buy, this is CarMax, Cintas, right? Discover, it goes on and on, right? These are the stocks that we monitor. We monitor every single transaction. Now be thinking, how could we monitor every single transaction and tell whether there's more buying or selling pressure going on every single individual transaction? Think about what's also available on every single transaction, what's available at the time the transaction is executed. So how do we know whether there's more buying pressure than selling pressure on a single transaction? Quite simply, we record the bid-ask spread. So now if you're not familiar with stocks and how they work, basically, you know, the way that I used to remember it is quite simply, if you're buying a stock, the bid-ask spread, the bid is the wholesale price, the ask is the retail price. If you walk into a store, you pay full retail, you buy whatever they're asking, right? The ask price, okay? That's the ask price. If you negotiate it a little bit, say, well, or if you wait around for a sale, that's the bid price. And of course, it's reversed if you're short selling. So the bid is the price of willing to pay for a stock, and ask is the price a seller is willing to sell their shares at. And the spread is the difference between the highest ask and the highest bid. So on something like Apple or Microsoft or Ford or any very high volume stock, the bid-ask spread is going to be a penny, 2 pennies, 3 pennies. On the thinner a stock gets, as in there's not as much action on the stock, there's not as many shares transacted in a day, that spread widens out. So what we do is we evaluate where the bid price and the ask price of the trade, and if the sale went off closer to the asking price, what do we know? The buyers weren't negotiating. The buyers weren't holding out. They're paying full retail. So if that instant, when it prints on the time and sale, we also record what the ask price was. We also record what the bid price was. And if it goes off closer to the ask price than the bid price, then the sellers were willing to hold out and get a little extra, a penny or two. And the buyers were willing to pay extra to ensure that they got those shares. Conversely, if the sale goes off at the bid price, what do we know? Everyone's bargain shopping, as in people who are buying stocks are not willing to pay full retail, and those who are selling stocks are willing to take a little bit less, right? Just a cent or two. So this when we calculate it all together for each stock that makes up each ETF in the S&P 500, obviously there'd be 500 stocks, that establishes whether there's a positive or negative tick volume, which, like Granville's original on-balance volume indicator, allows us to set up with great confidence a more precise measure of where the real power is all day long. Is it with the buyers or with the sellers? Because I'm going to tell you that most stock market prices are totally random. If you look at a stock market price and then you go look at it 5 minutes later, just because it moves up or down, even a few percent or a half a dollar or a dollar, that doesn't mean anything, right? It's just the natural flow of buyers and sellers. But if we look at the underlying current of what's going on, if we look at, instead of looking at the top of a moving river, we look underneath to see how much volume is flowing past a certain point, and whether it's closer to the bid price or the ask price. That allows us at the end of the day, we can look at a losing day on price, But we know that on balance, the volume was actually a bullish or a bearish for the majority of the stock, the majority of the transactions. At that point, we simply do a cumulative summation of the next 13 sessions. At the end of that time, we now have a pretty good idea of what percentage stocks are advancing, on hidden power, or failing despite rising prices. So at the end of that day, we know out of 500 stocks in our S&P 500 example, how many are on positive footing and how many are a negative stance. Using this creates what we call our ETF tipping point. Notice this is all done without the use of moving averages or any commonly available technical indicator. Our technical indicator is called the ETF tipping point, and it indicates on a daily chart when a stock moves from bullish to bearish, and that's how we trade. That's how we trade all of these 9 sectors. All 9 sectors are traded using exactly the same algorithm, right? So it works across everything from oil and gold to the S&P 500 to the tech index. So when it switches to positive and negative balance, more than 50% on a negative trend, we then have a sell signal for that ETF and vice versa. So I'll walk through the whole process of how trades are made in 3 simple steps. At this point, I'm going to assume that you've decided to forego your development of your own tick-by-tick collection platform, and you're going to use our signals or something similar. If not, feel free. It did take us a couple of years to get this right. I do have ongoing data costs of well over $1,000 a month, and I've spent in excess of $225,000 in programming fees over the years, the past 16 years, to get this right. But of course, some people just like to do it themselves, which is perfectly fine. So what we do is we watch for a signals notification after 12:30 p.m. Pacific on Fridays. These trade changes are only made on Fridays when the last 30 minutes of the market on a Friday, or if you can't get to trades at 12:30 p.m. to 1 p.m. Pacific on Friday before the market closes, you can trade the next day, which would be Monday, if you can't see your trade during the day. Now, up to this point, we've only talked about the single ETFs, the plain Jane, bare bones, and every result that we're ever going to show you is always going to be based on the single ETFs. So even though the results we have are pretty stupendous, they're based on these mammoth ETFs that generally, don't have massive price fluctuations. I mean, these are the SPY, the Qs, these aren't penny stocks or fast-moving momentum stocks. But we also provide you with the list of the 2x ETFs, so you can buy or short the 1x ETF, or you can buy the 2x ETF, or the 2x inverse ETF, or you could, of course, if you're so inclined to options, you could buy calls or puts on the 1x ETF, or calls or puts on the 2x ETF. And then you hold that position until you receive a signal to reverse. And this right here is where it gets pretty interesting. Because if you've ever studied options criteria or how to use options, you'll notice that there's a common thing that they often say. They often say at the very beginning, before they talk about an option strategy, they say, well, if you're bullish, or if you have a bearish outlook, you could do this. Or if you have a bullish outlook, you could do this. Of course, that's the $64,000 question. Should I be bullish or bearish? But with the ETF tipping point, we're going to tell you that overall, X market is bullish or X market is bearish. So you can play with that and make trades on that however you want, right? So for example, let's take a look at the OIH, which is our oil trade. We've been in that trade. It's crazy that we're a little bit long in the tooth in a lot of these trades, which is crazy. On one hand, on the other hand, it's very comforting that we're not getting whipsawed in and out of crazy trades. So I'd much rather take my 30, 40, 50% on a trade and stay in a trade rather than get whipsawed and get beat to death getting in and out of trades. So in OIH, we've been bearish since February. So if you go take a look at a chart of OIH or oil since February, that's when all the craziness started to happen with oil. So we're up 42.29% on oil. Of course, if you would have traded the double ETF, you would most likely be up some multiple of that. But what if you would have bought a single ETF put? Or what if you would have bought a double ETF call? Or what if you've constructed some sort of bearish option position on the OIH? You see where I'm going with this? And you can do that and go down the list, right? Let's say on SPY, you could have bought some calls on the SPY or some calls on the SSO. You could have bought the SSO. You could have sold some puts, right? You could have sold some SPY puts. You could have sold some SSO call puts as well. The possibilities are endless if you know already ahead of time, in general, this market is going to be bullish or bearish. And this tells us with a high degree of accuracy exactly what that's going to happen. Generally, we have about a 90 to 91% win rate in terms of winning to losing trades. And of course, the winning trades are a little bit higher in terms of average gain than the average loss on the losing trades. So an ETF is either bullish or bearish in the system. We try to be in the market at all times. If you're only comfortable playing to the upside, understood, then only trade when bullish and go to cash for that ETF when bearish. So every Friday at around 12:30 p.m. Pacific, we send out an email alert as to the status of where we believe the signals will be by the end of the trading day. This is done by posting our membership area and by email, of course. And then really you just do it again a couple hundred more times. No one of these trades is going to be super, knock your socks off. You're going to retire to Mazatlan. But when you do it 1,487 times in the past 16 years, 12 years, we still only have an average of 5.2 trades a month. So that's our hidden secret. Find a system that has a positive expectation, read it makes money in the long run, and compound the heck out of it. Again, these results that we're showing you here are current as of the close of business yesterday. So the results couldn't get much fresher. This is exactly where we're at. Through the pandemic, through the craziness, through people's sleepless nights and lost money, this is where we're at. So not too bad. So of course, my life goal, like we mentioned, is to start with the end in mind, but also never let my money pursuits take precedence over my real life. Like we mentioned, I'm from a small dairy farming town. Never wanted to be chained to a desk with a 9-to-5 job. I like spending time with my family and traveling. I've been to some of the most fantastic places on earth. This is a lake less than an hour from my home in the mountains of North Idaho. This is the lake that I spend most of my time with in the summer with my kids on the boat. And also internationally. This is a volcano erupting in Guatemala outside my hotel. Of course, Tikal in Guatemala, other famous places in Guatemala, Samuc Champe. I've hiked the Inca Trail all the way into Machu Picchu. I've surfed in 2 or 3 continents. I've visited most of the major Mayan ruins in Mexico and Guatemala and Honduras. I've done crazy things like this is the highest commercial rappel in the world in Lesotho in Southern Africa, over 205 meters. So my kids and our family in Nicaragua just hanging out for a day, jumping off a bridge, whitewater rafting off a 12-foot waterfall. I've been asked to share this kind of stuff all over the world. One of my most recent events, it's the crazy thing with all the COVID stuff is there hasn't been any events recently. The most recent event I spoke at was actually end of 2018 in the UK. But I'm not one of those guys that just goes to the UK, goes to an event and just goes home. We went over to Budapest. This is a famous, one of the most famous hot water sauna places in Hungary. And this is my wife on the shores of the Danube in Vienna before we get on the boat to go to Bratislava. So for me, that's what life is all about. Yes, we got to make money. Yes, investing is important and financial stuff is important. However, those things you should get those things figured out and they should take a backseat to your real life. So who's interested? If anybody can tell me what this is, this would be very insightful. Well, that's a hill of beans. And that's what, attending an event like this will amount to, unless you take action. You gotta take something away from this of, this is what I'm going to do. This is what I'm going to change, or this is what I'm going to stop doing. Right. Like I mentioned, I'm nobody special. I've never worked on Wall Street. I've always been a retail trader. But here's my simple offer to coach 25 of you. For this program, there's 2 program offers. It's either $997 for 6 months access or $2,997 for 3 years access, which is a 50% discount. And if you go with the 3-year package, of course, we'll give you my advanced options course, which I usually sell for $1997. Also give you my weekly option science course that we usually sell for $497. But I hate overhead. I could get some fancy marketing, hire some full-time sales guys, but that's just not what I'm about. This is my office. This is where I'm sitting right now. Just a nice executive office in Spokane Valley, Washington. So if you look at the picture on the right, my office is just down that hall. you know, I've been doing this a long time. I'm not in this for quick overnight gains. I'm not in this for people who aren't serious. You know, if you take a look at Better Business Bureau, A+ rating, been in business 16 years, has 0 complaints. Like we mentioned, we started a thing 2 years ago where we actually even put aside nearly $100,000 and started buying and showing the actual trade confirmations of every single trade as they came up. And this is the TD Ameritrade account for that. So instead of dealing with big wigs and hedge fund managers, I'd rather enjoy my free time and just deal with a few customers. Now, in the interest of time, we don't have enough time to go through a lot of these testimonials. I have some video testimonials. We're going to skip through those, but suffice it to say, we're doing what we can to make sure that everybody gets a shot at this without taking an inordinate amount of risk. So quite simply, we're going to take the majority of the risk by giving you an ironclad 2-part performance guarantee. And it's pretty simple. Part 1, go through the entire training, start trading live, or even in demo mode, or in paper account mode, or paper money mode, whatever your platform calls it, but without real money. And if you don't love it, get a complete refund anytime within 90 days of ordering. Simply submit your trading log and we'll issue a prompt refund. Part 2, learn the system, use it for a full 6 months, executing all the trades as they come up. If you don't at least make the system investment back, $997 for the 6-month option. In profit, I'll personally work with you for free until you do. And one thing that we're doing right now, because the system's been a little bit slower in generating new trades, we're in, you know, obviously 9 trades right now. 7 out of 9 are profitable. It looks like the other 2 will flip over here sooner than later. So of course, you know, we want you to be patient. We don't want you to just enter trades that are aged. So we'll extend your 6-month trial period until the first trade starts. So you get the chance to get in, take the trades, go through the material, but wait. Your time in the program won't even start until the first fresh trade comes after you become a member. So either way, you love it, you make good money with it, or you hate it and you get your money back. I don't think we can be much more fair than that. So we are going to give some bonuses for the first 25 signups. A couple of them are dead serious bonuses. The other is just my personality, that I love travel, I love vacation stuff, and I love spending time with friends and family. So take it in that light. So the first bonus is we're going to give you a 2-day virtual workshop in the fall of 2020. So that's coming up within about 6 weeks. We're going to do that, and that's simply we do that over GoToWebinar. You attend from your own home, free through your computer. If you can't make any one of the individual sessions, they're all recorded. They're available for everyone. And that event, we go through every single piece of the system, different ways to use it, some of the option strategies that we've talked about, ways to apply this to use with other things that you're trading, go through the complete history, show the ups and downs of the system. Anyway, you get that complete 2-day virtual workshop, full training it's worth at least $2,000. You get that included. Another bonus for the first 25 signups, we do a monthly live customer support webinar. It's held on the 4th Monday of every month, and we recap our exact current positions. And the added benefit is we stay on the webinar until every single question is answered. So sometimes it's 20, 30 minutes. We go over our current positions. Nobody has any questions. We're done with the webinar. Other times those webinars can go 2.5 hours. If people have questions, that's the time you get asked me directly, live, just like personal one-on-one interaction through a webinar format. And the third one is, this is the fun bonus. Just for getting off the fence, just for trying something different, just for getting your mindset a little bit different, we're going to give you a free 5-night vacation hotel stay in either Mexico, at Cancun, Puerto Penasco, Mazatlan, Acapulco, Puerto Vallarta, in Thailand or Spain, or a 3-night stay in places like Vegas, Branson, Williamsburg, etc. Has a value of about $1,500. You pay the resort fee and taxes. There is no timeshare pitch. So people say, well, Kurt, what does this have to do with trading? Here's what it has: everything to do with it. You've got to begin with the end in mind. The end in mind is not to have a profitable trade on the DIA. The end in mind is not to have a profitable oil trade. Who cares? Your children, your family does not care about those things. Maybe they should, but they don't. So we're giving you this bonus. You can use anytime you want. Obviously right now it's kind of a crazy time, but I've done this multiple times, and it really is just as simple as you pay the resort fees and taxes, no timeshare pitch. We stayed at a wonderful place in Cancun. Here's what you use that for. You use that time to get caught up on all the trading books, all the mindset books, all the business books that you've been meaning to read, but it's so much better and so much easier to learn when you're sitting by a pool and you have a time limit, you know, where your kids are saying, your wife or spouse is saying, hey, we've got to go to dinner at 5 o'clock to get a couple hours of good reading in. Environment is everything. So that's why I'm including this bonus. And hey, if you sign up and cancel, you still get the certificate. It's a piece of cake to use. We just like people to know, hey, this isn't all about the numbers and the hard finance. So of course, to claim one of the 25 spots, you can call our secure voicemail line at 509-720-7867. Leave a detailed message along with your full name and address, phone, email, and credit card, along with your choice of which of the two packages you'd like, 997 or 2997. We'll return your call ASAP to confirm and process your order and answer any questions. Or you can order online, and I'm sure this will be popping up on the screen here in a second. Or you can order online at etftippingpoint.com/6-month or etftippingpoint.com/3-year. And of course, we're only going to do this for 25 spots. The reason for that is very simple. Because I'm willing to offer the personal mentoring and one-on-one, kind of a hidden bonus that we don't talk about. When you sign up, I actually call you within the week and we sit down, usually spend between 15, 30, 45 minutes together, kind of get a feel for where you're at, what your investing goals are, and kind of help you with some personalized and individualized training at that point. Now, remember, the bonuses are for the first 25 signups. You get the 2-day virtual workshop in the fall of 2020. It's coming up in about 6 weeks. You get the monthly live customer support webinars. Of course, like we talked about, the fun bonus, you get the free vacation hotel stay. So you have nothing to lose, years of profitable base hit trading to gain. And again, like here's our current exact, here's our exact trades that we're in right now. So you do nothing else to jot these down. We're long DIA, SPY, Qs, KBE. We're short oil. And take a look at that date, 2-3. Go back and look at your charts on 2-3, what happened after that to oil. GLD, semiconductors, IYR, and XLB were all bullish. So here's where we had all our proof from our current customers: Sarwan from the UK, Andy from Indianapolis, Dean from Florence, and Ken from Clearwater. It goes on and on. Louise from San Antonio. And I think that's about it. We're going to go ahead and answer any questions. I think we have a few minutes. So we'll go ahead and open it back up. If Raleigh wanted to pop in any of the questions that we had, we can cover some of those. I usually have a FAQ thing, but with preset questions, but we'll go ahead and take some questions live if we have a little bit of time for that.
Hey, Kurt, once again, thank you for a great presentation. Very, very thorough. Love your approach. There were some questions that came up here, but interesting, you also were so thorough, you answered many of them during your presentation. But one of the things that came up from several people is, is this something that you would recommend, or do you have people that trade their retirement accounts using your ETF tipping point methodology?
Yeah, absolutely. Especially because these are simple ETFs. You're not doing something where, retirement accounts have certain limitations on, you can't short things in retirement accounts. And obviously you don't want to be doing day trading and things like that. But especially if you're willing to diversify the portfolio and get at least, I would say, now obviously I'm not a financial advisor. I don't know anybody's specific financial situation, but if you take a look at our list, it's kind of broken down. If you pick something out of the first three, either the DIA, the SPY, or the Qs, and if you pick something out of the next three, the KBE, the oil, or the gold, and then if you pick something out of the last three, the semiconductors, the real estate, or the materials, if you do at least that and get at least one out of each of those sectors, you're going to have a pretty balanced portfolio, even with just three. Now, obviously, it would be better if you went into all 9 sectors. If you went into all 9 sectors, right now, if you were in all 9 of these, I think the average thing, if you add all these up and divide it by 9, you're up 23% across the board, just with single ETFs. So yeah, it's very, very easy to do with ETFs, with retirement accounts, specifically because we're dealing with pretty massive. I mean, the SPY is the largest ETF on the planet, and the Qs is not far behind. So yeah, it's pretty easy to trade in a retirement account.
Yeah, that's great. That's what I figured, but I didn't want to assume that. So great questions from the people out there. Other thing here, let's say a lot of very positive. A lot of good comments, Kirt, about just the way you conduct yourself. They like that work-life balance that you maintain. I just thought I would share that with you. And obviously that bonus that you have where you're inviting people to actually have a vacation, as they absorb new knowledge and information speaks to that. Something else that I've been asking all of the presenters is that, as you know, we are in trading the moment now, and I think you even mentioned it, the number of trades that you've got, it may be a reflection of what's going on in the environment. But as we approach the national election and things of that nature, are there any specific concerns or opportunities that you're aware of that that you're keeping an eye out for in this current environment we are in with the uncertainty that we're up against here?
Yeah, absolutely. I mean, I think there's going to, I believe there's going to be some kind of massive sell-off either beginning of November or sometime before then. So for these people who are the diehard buy, hold, and pray, this will be yet another wake-up call to them that, hey, you got to be a little bit flexible. You got to be willing to go short or, take the other side of the market. When those opportunities arise, of course, markets crash a lot faster than they rise. And so fortunes will be made and lost in this next correction, just like they were in the correction in March. Obviously, you want to make sure that you're not taking decisions just, on mass market media or things like that, but just looking at the prices and watching to see what happens. It'll be very interesting coming to this election. There will be some big changes. This is, I've been trading full time since 2010, but trading part time since about 1998. And I cannot recall a crazier market than this in terms of the euphoria in the middle of a pandemic. I mean, it's almost unprecedented.
It is. It really is. I agree. New question just was typed in here. Kathy basically says, "Hey, it looks like Kirt's focus is on ETF option trading," and he said, "If so, what's the difference between stock and ETF option trading from your perspective, Kirt?"
Gotcha. So typically, when people are buying stock options, obviously they're dealing with the individual issue. They're dealing with the stock, and so you have the pluses and minuses of that. The volatility is probably going to be higher, right? When we're talking about ETF options, we're talking usually the trades are a little bit smoother. They're a little bit longer in time period, right? And they're less frantic, I guess, is what I'd call it. You don't get that crazy feeling in the pit of your stomach, and you look up, it's up a couple thousand, it's down a couple thousand. It's it's a little bit smoother sailing. I mean, just like if you look at the price action of the GLD or the SPY or any of the ETFs that we trade, it's a little less volatile on a daily basis than a stock. So to me, it makes it easier to sleep at night. I love trading mechanical systems because the second guessing part of subjective systems would just drive me crazy. You know what I mean? I mean, my answer is pretty simple. Well, why didn't you sell on that day? Because my mechanical system, my algorithm didn't tell me to sell. I mean, maybe in the future, I will tweak and adjust and change the algorithm. But for the current period of time, let's just do what it's do. I mean, that's why we invented it, right? And then I can make my own individual. I can make my subjective choices on. Oh well, do I want to do a call spread? Do I want to do I want to do a condor? Do I think it's do I want to sell a put naked? Am I that confident that everything's bullish or those sorts of things?
Sure, absolutely. Okay, well, guys, let me see. Oh, question here was wondering, several people have said, would you mind putting your slide back up again with your trades?
Oh, sure. Yeah, of course. So granted, this is through yesterday, but no changes were made today. So these are the actual positions through the close of the market today. So, we don't hit the exact, we don't top tick anything. We don't bottom tick anything. We pick up most of the major moves. The crazy thing is we didn't sell off during March, during the sell-off. However, many of the other robotic advisors, some of my friends who trade algorithmic systems, didn't either. So, and then, the results after March kind of speak to that. One of my friends compared it to, he's like, Well, it's like Corona is this huge, massive weight on the market. Nothing has changed. All the major institutions are trying to be bullish, but the price is being suppressed by this massive weight. If you take that weight off, things are going to bounce back up, and lo and behold, that and more, right? I mean, the Qs especially, and the SPY, but now even the DIA is back to its March levels. Pre-March levels, end of February levels.
Well, that's good point. And Kirt, once again, thank you so much for being with us today. It's wonderful to see you again. Appreciate all the time that you took to prepare and present your information. Folks, just another great speaker giving a perspective on how they trade the markets, in these times, trading the moment, the kind of systems and the kind of time and personal investment that they've made in building these systems that contribute to their success as traders. So once again, thank you so much for sharing that. Kirt, I want to wish you a happy day. And are you home or are you on the road?
Well, I'm sitting in my office right now. So
that's right. You're in your office.
Yeah. I mean, I had to clean it for nothing. So I guess I might as well enjoy it.
Tommy, can you put that closing slide up for me? Trying to find Kirt, see if we can go ahead and switch the controls around. Super.
There you go. And so once again, Kirt, thank you very much, for your presentation. And folks, Kirt Christensen with TradingScience.com, you can check them out there. The special offer for the ETF tipping point system, 6-month access to the EFT tipping point program. There's also a 3-year access, consistently trade ETFs in less than 1 hour per week. And of course, his ironclad 2-part performance guarantee, the way he stands behind the success and his commitment to his clients. There are 2 special offer links there, ETFtippingpoint.com/6-month and ETFtippingpoint.com/3-year, which also includes some additional bonuses. And if I remember correctly, the first 25 people that sign up are going to get a voucher for some wonderful vacation opportunities that they can take advantage of as they study Kirt's classes. So once again, Kirt, thank you so much for that. And folks, we're actually a couple of minutes ahead of time, but